market saw losses on Monday, with shares in Hong Kong tumbling the most amid worsening tensions in the city. 3 pro-democracy lawmakers in Hong Kong were arrested over the weekend, while local police opened fire at mass demonstrations. As a result, the Hang Seng index declined 2.62%. Meanwhile, the Shanghai Composite was down 1.83%. Japan's Nikkei 225 reversed early gains to trade down 0.26%, while South Korea's Kospi fell 0.61%. In Australia, the benchmark ASX 200 bucked the general downward trend in the region and rose 0.72%. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.17%. Trade optimism dampened when U.S. President Donald Trump said late last week that he has not agreed to scrap tariffs on Chinese goods, which spooked investors and fueled risk aversion across the markets. In Europe, stocks traded in a mixed manner amid a dampening of optimism over U.S.-China trade talks and tensions in Hong Kong. The Pan-European Stoxx 600 index closed virtually unchanged. On the data front, UK GDP grew by 0.3% in the third quarter, meaning the British economy avoided slipping into a technical recession after contracting by 0.2% in the previous quarter. UK manufacturing output fell by 0.4% in September compared to August, a 1.6% drop from September of 2018. In the U.S., the S&P 500 and NASDAQ stock indexes retreated from record highs on Monday due to rising uncertainty about progress in the U.S.-China trade talks following comments by Trump. Meanwhile, a jump in the Boeing shares helped the Dow Jones Industrial Average eke out marginal gains, with the index adding 0.04%. Shares of Boeing Co. rallied 4.5% after the plane maker said it expected U.S. regulators to approve the return to commercial service of its grounded 737 MAX jet in the coming weeks and expects commercial service to resume in January. The S&P 500 lost 0.20% and the NASDAQ Composite dropped 0.13%. As the earnings season continues but is drawing to a close, Walmart Inc., Cisco Systems Inc., NVIDIA Corp., and other companies will report their quarterly results these days. Also, testimony by Fed Chair Jerome Powell on the economic outlook later this week will be in focus. In currencies, the dollar was lower against major counterparts after some consolidation at the start of the trading week. The euro-US dollar shifted into a recovery mode after 5 days of losses, but the pair failed to challenge the 1.1050 local resistance as the common currency still lacks the upside impetus, with the greenback looking relatively stable. On the other hand, the downside was capped amid expectations of an improvement in the German ZEW survey due later on Tuesday. Also, the euro bulls derived some support from reports that U.S. President Trump is expected to delay auto tariff decisions for 6 more months. In commodities, Brent finished unchanged on Monday as the prices derived support from the 100 EMA and got back above the $62 handle. The futures struggled to regain the $63 figure as concerns over trade talks and the slowing global growth continues to stir investors. Traders expressed worries after Trump said that recent reports about an agreement to eliminate tariffs in stages weren't accurate and emphasized that he believes Beijing needs to deal more than Washington. The comments raised questions about a near-term trade deal and capped the upside attempts in the market. In the short term, oil prices will remain vulnerable to further losses as uncertainty on the U.S.-China trade front remains heightened. Technically, the $62 level remains in focus, and Brent has yet to confirm a break above this handle. Thank you so much for watching. That is all for today, and please click subscribe to always be in touch with the latest market news.